Well, time for another update on silver, and I know everybody thinking the sky's falling because silver crashed pretty good this morning along with the other metals and just about everything else, including the euro, stock market in the U.S., the stock market in Europe. Basically, the fear index is up. That's what's going on. No fear if you got silver. Silver's going to be your safety. There's no doubt about it. I should write a book, charge like 9 cents a copy. 4 pages in the book for page 1. Buy silver. Page 2, buy palladium. Page 3, buy platinum. All the silver stuff first. Page 4, buy gold. Actually, I think platinum and palladium are both going to play out better than gold in the long term. Right now, we got this typical down cycle, which happened in 2008, but it's a little different. But if you're looking strictly at the metals, especially gold, it's a good indicator. I'm not going to put up a chart. But we basically had the same type of deal going on in 2008. It hit a peak, made a correction, went up, didn't go up as high, made another correction, lower low, didn't go up as high, made another correction. Actually, we haven't hit down below that final correction yet. But I don't know, if it sits flat so damn long, that's all it's going to do. I'm not worried about it, and I think things are going to turn around pretty fast. The only thing that gets me nervous is the silver crowd starting to talk about $37 silver by the end of August. I don't know. Things can heat up a lot faster than you think, though. Usually when that's what happens, it sits flat. That's what happens with a lot of things. Sits flat. You're waiting around, and all of a sudden, wham, everything goes up a lot faster than you think. Now, I want to kind of point out a few other things. Today, there was a lot of fear in the markets, and there's one thing you can look at. It's actually a stock ticker. It's a very good indication of fear, F-E-A-R, like we're scared, everything's going on bad. It's the volatility of the S&P, the VIX, the volatility index. It was up 16.3%. That's as of right now. So I'm talking about midday, Monday, July 23, 2012. But hey, this is a good index, the VIX. You can see down here in the end, this is like spread out over a long period of time. So like I'm showing that actually the index was a lot more fearful before, right? It was really sinking. This is back in like August. And everybody was selling off, oil was crashing and everything else. So it's been a lot higher before, but this is a big jump from one day. This is a big jump. So fear's taking over. Now, couple of things. This is like a general thing that goes on here, but like it's been going on. European banks, they're not propped up as well as you'd think. Since 2008, European bank assets in the United States have fallen from $1.5 trillion to under $1 trillion. Well, to $973 billion. So they lost over 1/3. They lost like over $0.5 trillion in their assets that were in the United States, the European banks. So there's a hell of a lot less shoring them up. So basically what comes down is you have an asset on the books, like what happens is you keep it at, well, if it's going up, you keep it at cost. You don't write it up to market. But if it's going down, you should write it down to market values because you're holding, like in other words, that's basically an accounting principle. You should write it down. But they drag their feet because people don't want to accept reality. If they have like land assets, real estate assets, and they think they're worth so much, they have a tendency of not writing them down. So write-downs, sale of loans and businesses, bank failures, and higher capital ratio requirements pushed the U.S. assets held by European banks to the lowest levels since 2005. So that was kind of like a prelude to what happened later on. But that's a bad sign all the way around because it goes to show you the banking system in Europe, even though it's shaky. It's not backed up by as much as people think. So the other thing is today there was more investors worried about the Italian and Spanish debt. So that's another thing that came into play. But, it's almost like news has a way of going one way to the other and all this kind of crap. Like, I know people are really looking at silver right now, and they're like, it's crap. It's going to go to 21. It's going to go 18. It's going to go to 15. I got to say something about this a little bit more too. I like Ron Paul. I'd vote. Well, I don't. He's a little bit too much one way, in my opinion. I don't know. I got major suspicions on him. But anyway, I like what he says in principle. But if he became our president, I think silver would go to 15 and it would stay there, because Ben Bernanke's the guy that's actually going to make our silver asset class fly, and fly a lot faster than all the other asset classes. I mean, people are going to be selling cars and houses for food, while we're going to have our silver go flying up faster than all the food prices are. So, I mean, Ben Bernanke actually is our hero in reality. I don't know if people want to realize that. And I know, like, anytime he gets a lot of heat, he just holds off on doing QE. And I guess things aren't bad enough yet. I mean, stock market's down, but it's not that bad. It's not as bad as, it's got to drop down even further. Then, he will act. He will act. But it's got to be an emergency. Now, crude oil dropped almost $3 today. A lot of that was because the Iranians, or some officials in Iran, said that they won't close the Straits of Hormuz, or that's what they said. I don't know why. I think those guys are stupid too. I mean, I'd be like, if I was making my money off of oil, I'd be like, yeah, we're going to close the Straits of Hormuz. I'd scare the crap out of the markets every day if I was selling oil, right? I mean, why not? Make the damn stuff $200 a barrel. Scare the crap out of everybody. Yeah, we're going to blow up the Straits of Hormuz. I don't know what these guys are thinking, because they're in the business of selling oil. So, I mean, I don't know where their shrewdness is. I guess they don't have any. But that's the way they do it. I mean, even if I wasn't going to blow up, I wouldn't blow up the Straits of Hormuz. I'd just scare the crap out of them, man. I would. Because I want the flow of oil going, because that's how I make money. But I'd have the big fear factor up there to get the highest price for my product. I don't know what's the matter with these guys. It's just like they're about as slick as Ron Paul. Anyway, Ben Bernanke's my buddy. I just can't wait till he does QE 3, 4, 5, and 6 all rolled up into one. He might. His personality is, he's talking about this fear factor. Actually, I think, Ben might be a pretty nice, caring guy on the inside. You never know. He might not be this evil guy you think he is. There's other evil people running the show probably. I don't know. I don't know about this guy. But, what I think he might do, he's holding off on his QE so damn long, and I don't think it's his actual, what he wants to do. I think it's all the heat he's getting from people. Yeah, I know that's the wrong decision for the general economy, but it's definitely the right decision for silver, gold, platinum, and palladium, especially silver and palladium. So when he does this, it's going to have to be something that everybody's going to say, okay, yeah, that makes sense. He's probably going to overdo it. And what happened with QE2, since interest rates are lower already, it didn't stimulate the economy as much. So he might have to do a lot more. Now, this is a chart on a euro, and it's almost down to like below that 120 to 120 to the dollar. $1.20 buys a euro. Back in, I think it was the end of June 2010, it got down to like 119 or something like that, 118, around that range. And then QE2 hints were coming about. I'd almost expect it's going to play out the same way again. But, I don't have the crystal ball, and it sucks having to wait day by day by day, but I'm pretty damn sure of this stuff. I think they're going to only allow this euro to go so far. Now, there's another hint. They're not going to let the euro fall apart. The IMF came out today and says they're going to take measures to support Greece. See, one thing, if you want to really know, the euro didn't come together, get born by all the nations coming together in some kind of ground table and just agree upon this crap. This is all from the super duper elite, call them that, whatever you want to call them. Council on Foreign Relations, they're always saying they want the euro. New York wants it. People in Europe want it. Not the people, but the elite people in Europe want it. So they're going to continue on with this garbage. It's not going to fall apart that easy. And if it does, it's going to come back together in another form. That's what's going to happen. So the IMF says they're going to support Greece. So even Greece probably won't exit the euro that easily. But there'll be enough scares in the market. So the only way this is going to happen is a lot more infusion of money, because Greece is like got this thing. They say they're going to reduce their spending to 120% of their gross domestic product by 2020. But they can't reduce their spending by that much that fast. So they're spending a hell of a lot of money. And it's just not going to happen. So, I mean, that's like really cutting down. By 2020, basically 8 years from now, they want to get down their spending to 120% of their GDP. So they're going to need a lot more cash, and there's going to be a lot more money thrown into Greece. So it's not going to go away. The euro's not going to go away. There's probably going to be just bigger crises, and what's going to happen is you can see the pattern. They're just forcing everybody to work together. It's a big bunch of BS. So the more money they print, the more metals are going to go up. Theoretically. I know. I'm getting sick of waiting around too. Now, this is the index of the dollar. Now, one thing I want to point out is a little weird about this. You look at about 2008, the dollar index was low. And I know Peter Schiff was saying it was going to sink to 50 and all this garbage. And it went up to like, 90. But the dollar index was low in 2008, and so was the euro at the same time, right? Today, if you're looking at what's going on today, it's the exact opposite. The dollar index is up, and the euro index is all the way down. It's almost like, I'd almost suspect, it's a deliberate attack on the euro. That's what I'm thinking. Because I remember back in, I think it was 2010, beginning of 2010, or around the end of 2009, there was some rumor out there about Soros and other hedge fund managers getting together to attack the euro to prop up the US dollar. And lo and behold, you look at this whole period here, the euro was going down and the dollar was going up. So there might be something going on behind the scenes too about this stuff, but I don't know how they'd be doing that. And I think that thing had happened in 2010, the first half of 2010, when the euro declined all the way down to I think 1.19 to the dollar. I mean $1.19 to buy €1, and the dollar index almost approached 90. I think that was a legit thing that actually happened. I don't think that was a rumor. There was a deliberate attack on the euro that could be going on right now. It almost seems that way, because that's really the biggest factor that brings up the dollar index the most is what's going on in the euro. Now, I just want to point out something else, a little bit common sense. And let's say the dollar index was not sitting at 83, but it was sitting at, say, 75, like it was a good 10% lower. Well, your metals would be sitting about, silver would be sitting about $30 right now. So, like, if you're looking at other currencies like the euro, it's looking not too bad. And I would imagine there's a lot of physical buying going on in the euro because in Europe, because people are probably scared of what's going to happen to the currency. In other words, if they have physical silver, no matter what happens to what happens in a bank, like if I was in Europe right now and say I was in Greece and I had all this extra money, I would definitely convert over to physical silver. There's no doubt about it. And that's why I imagine there's a lot more people doing it, because of all the uncertainties of what's going on. And gold, I would try to use gold too. But it could be any one of four of these metals, because even platinum and palladium, they have the international currency code. Every single one of these metals can be converted into something else, into any currency you want. So, say for instance, in Greece, it's not going to happen because the IMF is going to bail them out and stuff and help them out. But say you had this big fear in Greece that they're going to go back to the drachma and you'll lose all this money. I mean, I'd be pulling money out of banks, if you're one of the bigger businesses, and I'm sure this is going on, and I don't think it's being reported, because it's a common sense decision to do. It's a very different situation there than the United States. Now, like in the United States, as I think it's going to happen, is that the dollar index is going to start declining, probably due to Chinese revaluing the currency, but also we might see the euro strengthen after it hits a bottom of, say, a little bit below 120, because that's when they're going to start. I mean, even if it isn't the Federal Reserve doing a QE or our U.S. government doing a QE, there's going to be some kind of IMF support of Greece. There's going to be some kind of thing from the ECB that's going to support, rolling over bond debt in Italy and Spain. So it's going to force the metals up one way or the other. And actually, even China is doing a type of QE and easing right now too. So, I mean, they're lowering the interest rates, right? And they're going to start doing more spending in their country. So all these things are very bullish for the metals. Now, like I stated, I'm very surprised. I think, we're probably not getting very accurate numbers as to what's going on in Europe, but just use a lot of common sense. Say you're in Spain, say you're in Greece, and you have a lot of money. What would you be doing with your money? Putting it in a bank? I'd be putting it in physical metals. Because no matter what currencies they choose, it's not going to matter. You can exchange it for that currency. Those metals are going to stay in relatively good shape. In other words, if they go back to the old drachma in Greece, you could really lose your ass. You could lose 50%. These metals ain't going to drop no 50%. You know that. So you know what they're doing. Anybody with a brain, you know what they're doing. I want to point that out because it's like the only option you have, period. There is no other option. Considering if you're not in the United States but in Europe, in some situations, that is definitely your best option by far, probably your only option. So I'd imagine there's a hell of a lot more physical buying going on over there than it's being said, and there's probably a lot more premiums on the metals too. So at one point in time, silver has a way of fooling the hell out of people. When it goes up, everybody thinks that curve's going like a rocket right to the moon. And you know what? I'll see idiots say that over and over again. But similarly, when it's sitting down flat for a really, really long time, it'll take off very unexpectedly. And if I read the lay of the map here, that's what I think is happening pretty soon. So, Ben, you're right. He's got his finger on a trigger. He's going to do it pretty soon. He's playing a card game. He's playing a poker face. But when he's going to have like a consensus to do QE. And even Ron Paul's going to have to argue, oh, yeah. Or Ron Paul's going to have to be like not criticizing him too much when he does. So I think this stuff is coming up pretty soon, Right now, a lot of stuff, like I pointed out, if you want to look at that VIX, that's the volatility index, went up 16% today. Fear factors on real strong, scared about the Italian debt, scared about the Spanish debt, scared about the Greek debt, and IMF stated about the Greek debt they're going to help them out, resolve their problems and stuff. So the only way they're going to resolve their problems is print more money. So what does that mean to metals? Goes up, right? So buy my book. It costs 9 cents. It's got 4 pages on it. It says buy silver, buy palladium, buy platinum, and buy gold. I mean, that's really all you got to know. And that's it.